The financial landscape is shifting faster than ever before, and if you're not paying attention, you could be left behind. Economic uncertainty, rising inflation, and growing debt are reshaping the way we handle money. And today, we're going to break it all down, whether you're trying to build wealth, protect your savings, or simply make smarter financial decisions. You need to understand what's happening right now. Let's start with inflation. Over the past few years, we've seen inflation hit levels not seen in decades. While the Federal Reserve has taken aggressive steps to control rising prices, the impact is still being felt in everyday life. Grocery prices remain high, rent costs are out of control, and even basic services are becoming more expensive. The problem with inflation is that it erodes the value of your money. If you had $10,000 sitting in your bank account last year, it's worth less today, simply because of inflation. This means that if you're not actively growing your wealth, you're effectively losing money. Many people assume that the best way to fight inflation is to save more, but that's not entirely true. While saving money is important, keeping all your money in cash is actually one of the worst things you can do during times of high inflation. Instead, investing in assets that appreciate over time, like stocks, real estate, or even certain commodities, can help your money keep pace with rising costs. Speaking of investments, let's talk about the stock market. We've seen some wild swings in the market recently, with major indices like the S&P 500 and the Nasdaq experiencing significant volatility. Some analysts believe we're in the middle of a bull run, while others are warning that a crash is on the horizon. So what should you do? The key is understanding market cycles. Historically, the stock market has always gone up over the long term, but that doesn't mean every stock is a good investment. Right now, we're seeing a major shift in market dynamics. Tech stocks, which have been the backbone of the market for years, are facing new challenges with regulatory scrutiny and AI-driven disruptions. Meanwhile, sectors like energy, healthcare, and defense are gaining momentum. If you're investing in stocks, diversification is critical. You don't want all your money tied up in one sector or one company. And if you're new to investing, consider index funds or ETFs that track the broader market rather than trying to pick individual stocks. One of the biggest mistakes new investors make is chasing trends, buying into stocks at their peak, and panicking when the market dips. Long-term disciplined investing is the best way to build wealth. Another major concern right now is debt. The US national debt has hit record levels, and that has serious implications for the economy. Government borrowing affects interest rates, inflation, and overall economic stability. But it's not just national debt that's concerning. Household debt is also at an all-time high. Credit card debt alone has surpassed $1.3 trillion, and delinquency rates are rising. Why is this happening? A big part of it has to do with rising interest rates. Over the past 2 years, the Federal Reserve has aggressively raised rates to combat inflation. While this has helped slow down price increases, it's also made borrowing money significantly more expensive. Mortgage rates have more than doubled, making home ownership unaffordable for many people. Auto loans and student loans are also more expensive, leading to a debt burden that's becoming unsustainable for millions of Americans. So, what's the solution? The first step is understanding how to manage debt effectively. High interest debt, like credit card balances, should be paid off as quickly as possible. If you're carrying a balance on your credit card, you're likely paying interest rates of 20% or more, which can quickly spiral out of control. Prioritizing debt repayment over unnecessary spending can save you thousands in the long run. For those with mortgages or student loans, refinancing might be an option if interest rates come down in the future. But right now, the best strategy is to avoid taking on unnecessary debt. This means thinking twice before financing a new car, taking on a large personal loan, or spending beyond your means. At the same time, you need to be thinking about ways to increase your income. In an economy where wages are struggling to keep up with inflation, relying on a single source of income is risky. This is why more people are turning to side hustles, freelancing, and investing as ways to build additional streams of revenue. Whether it's starting an online business, investing in rental properties, or even just taking on gig work, having multiple sources of income can provide a safety net during uncertain times. One of the most overlooked aspects of financial security is financial literacy. The truth is, most people were never taught how money works. Schools don't teach it, and unless you go out of your way to educate yourself, you're at a disadvantage. This is why so many people struggle with managing their finances. They don't understand concepts like compound interest, asset allocation, or tax planning. Take taxes, for example. Most people just accept whatever amount is withheld from their paycheck without realizing that there are legal strategies to reduce their tax burden. Maximizing retirement contributions, taking advantage of deductions, and structuring your income in a tax-efficient way can save you thousands of dollars each year. Yet, many people leave money on the table simply because they don't know how to optimize their finances. Then, there's real estate. The housing market is in a strange place right now. Prices are high, mortgage rates are high, and yet inventory remains low. This creates a tough situation for both buyers and sellers. If you're looking to buy a home, you have to weigh the cost of high interest rates against the potential for home values to increase in the future. If you're a seller, you may find that fewer buyers are willing to pay premium prices. So, what's the best move? If you're buying a home to live in for the long term, waiting for lower interest rates could be a good strategy. However, if you're investing in real estate, cash flow should be your number one priority. Buying rental properties that generate positive cash flow can still be a solid investment even in today's market. But if you're relying on home prices to continue climbing rapidly, you might be taking on too much risk. The bottom line is that the financial world is changing, and the people who adapt will be the ones who thrive. If you want to build wealth and protect yourself from economic downturns, you need to be proactive. This means staying informed, making smart investment decisions, avoiding unnecessary debt, and always looking for ways to increase your income. There's no single path to financial success, but the key is taking control of your money rather than letting money control you. Financial freedom isn't just about how much money you make, it's about how well you manage what you have. As we move forward, the economy will continue to evolve and new opportunities will emerge. Whether it's advancements in AI, shifts in global markets, or new investment vehicles, the key is to stay ahead of the curve. The people who educate themselves, make smart choices, and take calculated risks will be the ones who come out on top. So now the question is, what's your next move? Are you going to keep doing what you've always done, or are you ready to take control of your financial future? The choice is yours. If you truly want to take control of your financial future, you need to start by taking action today. The biggest mistake people make is waiting for the market to settle, waiting for a better time, waiting until they feel ready. The truth is, there will never be a perfect time. Economic conditions will always be changing, and if you keep waiting for certainty, you'll miss out on opportunities. Let's talk about wealth building strategies that work regardless of market conditions. One of the most effective ways to build wealth is by understanding the power of compounding. Whether it's through investing in the stock market, real estate, or business ventures, the earlier you start, the better. Small, consistent investments over time can turn into substantial wealth. But this only works if you have a long-term mindset. Far too many people get caught up in short-term thinking, chasing quick money, jumping in and out of stocks, trying to time the market, or getting involved in get-rich-quick schemes. The reality is that sustainable wealth takes time and discipline. If you start investing consistently, even with small amounts, and let compounding do its work, you'll be amazed at what happens over a decade or two. But investing isn't just about throwing money into the market and hoping for the best. You need to have a strategy. A good approach is to diversify, having a mix of stocks, bonds, real estate, and alternative assets. This way, when one sector is struggling, another might be thriving. Beyond investing, one of the smartest financial moves you can make is increasing your earning potential. Many people focus too much on cutting expenses when the real key to financial freedom is earning more. There's only so much you can cut, but your earning potential is unlimited. Whether it's advancing in your career, learning a high-income skill, starting a business, or building passive income streams, finding ways to increase your income will put you in a much stronger financial position. Now, let's address a crucial topic, financial protection. It's not just about growing wealth, it's about keeping it. This means having an emergency fund, having the right insurance, and having an estate plan in place. Life is unpredictable, and you don't want to be caught off guard by unexpected medical expenses, job loss, or market crashes. A strong financial foundation means you're prepared for whatever happens. The most important thing you can do right now is to take the first step. Maybe that means setting up a budget, opening an investment account, paying down high-interest debt, or learning a new skill that can boost your income. The key is to start. Financial success isn't built overnight, but every step you take today will pay off in the future. If you take nothing else away from this, remember this one thing. Financial freedom is about choices. The more control you have over your money, the more freedom you have in life. Another critical element of financial success is understanding economic cycles and how they affect your money. The economy moves in patterns: expansion, peak, contraction, and recession. If you can recognize these cycles, you can position yourself ahead of the curve. Right now, we're in a phase where interest rates are high, debt is increasing, and economic uncertainty is growing. Many people react emotionally to this, panic selling investments, avoiding the market, or freezing financially. But the reality is, these periods of uncertainty also create some of the best opportunities to grow wealth. Historically, some of the most successful investors, Warren Buffett, Ray Dalio, and even everyday people who build significant wealth, have done so by taking advantage of downturns. When the economy contracts, assets go on sale, stocks, real estate, businesses, things that were once overpriced become more affordable. Those who are prepared with cash reserves and a solid financial plan can capitalize on these moments. The mistake many people make is waiting for absolute certainty before making a move. By the time things feel safe again, opportunities have already passed. Let's talk about the role of cash. We often hear two conflicting messages. Some say cash is king, while others warn that holding too much cash is a mistake. The truth is somewhere in between. Cash is essential as a buffer, meaning you should have an emergency fund and liquidity available for opportunities. But if you leave all your money sitting in cash, inflation eats away at its value over time. A good rule of thumb is keeping at least 3 to 6 months worth of living expenses in cash for emergencies. If you're self-employed or in an unstable industry, you might want even more, closer to 9-12 months. Beyond that, your money should be working for you in some form, whether it's in investments, business, or income-producing assets. Now, let's discuss real estate in more depth. We already covered how high interest rates are making housing less affordable, but what about those who already own property? Many homeowners right now are locked into low-interest mortgages from previous years, which is both a blessing and a challenge. If you bought a home when rates were 2-3%, you're in a great position, but it also means fewer people are selling, which is keeping inventory low and home prices high despite lower demand. For investors, the key is cash flow. Appreciation is great, but if you're buying a property today, you want to make sure it's generating positive monthly cash flow after all expenses. That way, even if home values decline temporarily, you're still making money. Another smart move in this market, short-term rentals and creative financing. Some investors are bypassing high mortgage rates by doing seller financing, lease options, or partnerships that reduce upfront costs. Now, shifting gears to side hustles and new income opportunities. In this economy, relying on a single paycheck is risky. The wealthiest people don't just rely on one source of income, they diversify. You might think of investing first, but the truth is increasing your income first gives you the best leverage. What does this mean practically? If you're in a 9-to-5 job, consider ways to increase your income inside and outside your job. Inside your job, you could negotiate a raise, take on higher value projects, or learn skills that put you in a position to get promoted. Outside your job, side hustles like freelancing, consulting, or even online businesses can create additional streams of income. Here's a reality check. Many people feel stuck financially because they think in linear terms, trading time for money in a 40-hour work week. But when you build scalable income streams, your money-making potential expands exponentially. Whether it's digital products, real estate rentals, automated businesses, or investments, finding ways to detach your income from your time is how real wealth is built. Another key aspect of financial security, tax strategy. Most people don't realize that taxes are one of the biggest expenses in their lifetime. High earners often lose 30-40% of their income to taxes if they don't plan properly. The wealthy use legal strategies to minimize their tax burden. For example, business owners have major tax advantages, from writing off business expenses to leveraging depreciation and deductions. Real estate investors use strategies like the 1031 exchange to defer capital gains taxes. Investors maximize tax-advantaged accounts like Roth IRAs, SEP IRAs, and 401ks to reduce taxable income. Understanding these strategies and working with a tax professional can literally save you tens of thousands of dollars per year. Another overlooked but crucial aspect of wealth building is networking. Who you surround yourself with has a huge impact on your financial success. If your circle of influence consists of people struggling with money, living paycheck to paycheck, and not thinking about wealth building, it's going to be very hard to break out of that cycle. On the other hand, if you surround yourself with people who are making moves, whether in business, investing, or personal finance, you'll absorb their mindset and strategies. That doesn't mean you need to abandon friends, but it does mean being intentional about the conversations you're having and the information you're consuming. Another powerful financial hack is leveraging AI and automation. We're in an era where AI tools can help optimize your finances, from budgeting to investing. Tools like robo-advisors automatically balance your investment portfolio based on risk tolerance. AI-driven budgeting apps track spending patterns and suggest adjustments. Even business owners can use AI to automate workflows, increase efficiency, and reduce costs. The financial world is changing fast, and those who learn how to use technology to their advantage will be ahead of the game. Let's also touch on inflation proofing your wealth. The government keeps printing money, and every time they do, the value of your dollars decreases. Smart investors protect their money by owning assets that appreciate over time. Real estate, stocks, businesses, even certain commodities like gold, silver, and Bitcoin. These are things that tend to hold value while cash loses purchasing power. Finally, let's talk about legacy wealth. It's one thing to build wealth for yourself, but truly, generational wealth is built with a long-term vision. This means estate planning, proper asset protection, and making sure your money continues to grow even after you're gone. Many wealthy families have trusts, life insurance policies, and structured investments that ensure their wealth benefits future generations. One of the biggest mistakes people make is building wealth without protecting it. If you don't have a will, a trust, or an estate plan, your assets could be tied up in probate, taxed heavily, or distributed in ways you never intended. Taking time to structure your finances properly ensures that your family and future generations benefit from the work you've put in. Final thoughts. Right now, we're at a crossroads. The economy is shifting, and people will either take control of their financial future or get left behind. You have a choice. You can keep following the old system, relying on one job, saving in a bank account, and hoping for the best, or you can take action, learn wealth building strategies, and create real financial security. The most successful people don't wait for permission. They educate themselves, take calculated risks, and adapt. The question is, will you? Because at the end of the day, wealth isn't just about money, it's about freedom. The freedom to choose how you spend your time, who you spend it with, and what kind of impact you make in the world. So start today. Whether it's learning new skills, investing, building additional income streams, or simply improving how you manage money, every small step compounds over time. The future belongs to those who prepare for it, and the best investment you can make is in yourself. So start today, whether it's learning new skills, investing, building additional income streams, or simply improving how you manage money. Every small step compounds over time. The future belongs to those who prepare for it, and the best investment you can make is in yourself.